Hey everyone, it's Benny the Finance Dog. Welcome to my channel. On today's video, we're going to be talking about having a trade plan, the importance of a trade plan, and walking you through a trade that I took today on the back of the CPI report that came out at 5:30 a.m. Let's begin. So a trade plan is a document or somewhere that it is pre-planned ahead what your trading goals, strategies, and rules are that you can use in your day-to-day trading. Now, a trade plan doesn't necessarily have to apply only to day trading. It can apply to swing trades or your long-term investment. It's always good to have a plan when doing any type of investing. And the reason for that is because it helps you to stay disciplined in the heat of the moment for your day trades, and more importantly, just make informed trading decisions and have a higher probability of being profitable in your trades. Without a trading plan, at least when it comes to day trading, you're more likely to make emotional trades that can lead to losses. You're also more likely to get sidetracked by market noise and make impulsive decisions. So, to formulate a good trading plan, you should know what your trading goals are in terms of how many trades you're looking to take that day, where you're willing to take profits on a trade should it work in your favor, and more importantly, as it applies to risk management, where you're willing to cut your losses, whether that's a finite dollar amount or a percentage of the overall position that you have in play. Now, I encourage everyone to make two plans as it comes to day trading: your overall day trading plan and your day to day trading plan. Your overall day trading plan should basically outline the amount of capital that you're willing to put into a trade, your rules for entering a trade in general, and a standardized way of exiting the trades, both in profit and at a loss. That should not change day to day. That should be very static as you move day to day, regardless of the conditions of the market. The second plan that you should have on the day to day front is your more specific trading plan for the day. And this will include where to get in, where your levels are, and takes a bit of pre planning, whether you do it at night or prior to open in the morning. Now, the East Coast traders have a bit of an advantage with the market opening at 9:30. You get more time in the morning to kind of warm up, wake up early, see how the pre-market is doing, and can potentially make a plan, an hour before the market opens. Whereas those on the West Coast, market opens at 6:30, so you do have to rise a little bit earlier if you plan to make your plan in the morning, or you have of course more time in the evening after the after hours closes to make your plan. A trading plan is a real essential tool for any trader. Like I said, it helps to stay disciplined, make more informed decisions, and reduce your risk, which in this game, the risk management aspect is really how those end up staying in the game for longer. They manage their risk correctly. Now, let's go over quickly my trading plan for today. Now, I did trade Apple this morning and had some pretty well defined levels as we went over in our last video on some macro levels that I was watching throughout the course of the week on Monday and Tuesday, right? We had talked about that 191 level holding to the upside. We also talked on the downside, potentially a 190 level as well as a 188.8 level and a 187.50, and ultimately we were trying to make sure 185 was held on the monthly level. So those were our levels going into today's CPI report. The report came out at 5:30, which is an hour before the market opened, and we saw on the hourly chart the price of Apple shot well through that 189.90 or 190 flat level that we had looked at and went above the 191 level, almost touched 192. If we switch over to the half an hour chart, what I was watching this morning in the first 30 minutes of trading was whether or not we had held over that 191 level in the first 30 minutes of trading. Now, the CPI news that came in this morning was generally positive. Obviously, we're lower than expectations. Inflation seems to be coming down at a rate that is favorable. So obviously the market was prone to go up based on this news. Now, based on my experience, usually whatever pop we get in the morning off positive news, we quickly give back in terms of profit taking and people exiting positions who were gambling on whatever the report was going to say. So whether or not we held the 191 level was going to determine whether or not I took trade in the long side or I went short and took puts. So for the first half an hour of the day, I was really just watching to see where that first 30-minute candle closed so that I can make a proper decision on where we were going to be at. So the first 30 minutes of the day, the candle did close at 190.72, which was below that 191 level. So I could tell that more downside was likely. And I still wanted to let it play out for a little bit, so I didn't actually enter a trade until about 7:15 as Apple continued to push closer and closer to that 190 level. I just wanted to make sure we weren't going to go over. Around 7:15, we do start heading back down to the downside. That's where I entered a 190 put contract. The expiration of this Friday at $84 per contract. And basically, this was a very smooth trade all the way down. We did get a little bit of a pushback throughout the rest of the hour, but we broke through that 190 level pretty convincingly on a big 15-minute candle, pushed back a little bit, and that's where I decided to take profits, as I didn't know if that 190 level was going to hold for us or if we were going to continue to the downside. Now, these contracts did end up running all the way down as Apple continued down and hit our 188.50 level, kind of blew past our 188.8 level that we had before, but that level basically held. It tested the break, came back, and reversed for the rest of the day. These contracts topped out at $200 per contract, which would have been a 150% gain if you had gotten in where we got in and got out at the very, very top. But that's just, not likely for the most part. So my trading plan was to get out whenever this got back to a level and tested it, and that was at that $134 per contract. So I did get out at a 70% gain, which is a very nice trade as far as the only trade on the week. So we were comfortable, obviously, taking that W in, and basically a lot of it was because of the levels that we had drawn out before and the higher time frames, candle watching, as well as just sticking to the trade plan. So going into the rest of this week, we should see the levels continue to hold. It looks like we closed underneath or right at that 190 level. So getting a little bit of a cup and handle into the aftermarket hours could obviously see that continue to rise and Apple continue its rally. Though if we do go to the downside, we would be looking for another bounce at that 188.8 level, as that's been previous resistance turned to support. As well as we could see that 190.50 level to the upside kind of act as the resistance who could turn into support at a later date. So hopefully this helps you in your trading and you can understand, where to get in, how to make a trading plan, and the importance of a trading plan in your own trading. We should be back on Friday to see if we took any other trades tomorrow or Friday, but if the market doesn't give it to us and it's not part of our plan, it's okay to sit on the sidelines and be patient. Wait for your pitch. We just watched the Home Run Derby this week, so it's good, good practice to just wait for your pitch so that you can hit, singles, doubles, triples, and the eventual homer